so that you have less noise in it. So in case you need, you just let us know.
Okay. Hello? Did I call you? Hello, did I call you?
Godfrey.
Yes, Ambrose.
I think we can allow the participants.
Yeah, we give it 5 minutes.
Yeah, we give it 5 minutes. Because we can allow them, they come in 5 minutes, then we start.
Okay.
I don't know whether there is a technical issue there. Is Peter around?
Yeah. There's a home.
Yes. What is, I don't know. Yeah, they have arrived. They are already coming. They are already in.
Yeah, about 85 are already on.
Okay.
We're now at 91.
Good morning to you. You're welcome to the training in advanced Excel, financial analysis and reporting. My name is Ambrose, and I work with the Institute. I will be the moderator for this training up to midday. I want to welcome all of you for this particular training. And as you are aware, we are now virtual. I believe wherever you are safe and you are doing well as well. We will have this highly participative training for 3 hours. And therefore, I expect you to have, number one, to have enough data on your phone or device or laptop, whatever device you have. Then I also expect you to have enough power. The device should be full-time connected to power. If you have attended the previous physical meetings of this nature, where we have practical Excel, advanced Excel applications, we've faced some challenges with members not having enough. The battery is not running for more than 2 hours, and it would create a bit of a challenge. And now this time, you will be in charge there wherever you are, and make sure you have enough data and also power so that we are able to run together. I will introduce the presenter, whom I believe most of you know, and then afterwards he jumps into the presentation. I believe we shall have also interludes some time, since this will take a lot of time. 3 hours is not such a short time for an online training. So we shall have interludes of maybe 5 minutes, 10 minutes of relaxation, and you practice what we are doing, what the presenter will be telling us to do. So before I introduce him, I want to encourage you to write your questions in the Q&A tab. The Q&A tab is just when you look down, you'll see where you find the mute, stop video, something. Then you'll see there Q&A. You click there, it will give you a page where you can type your views. Don't use the chat. The chat, you can chat with your colleagues who are already on the training. I see we are around 102 people. I believe there could be some of your colleagues. You can chat with them. But for the purpose of this training, question and answer, comments that are relevant to all of us, please use the Q&A tab. Along the way, we shall give you an opportunity to raise your arm and ask a question. And possibly we may give you an opportunity to share your screen and show us what you have done, according to what we are teaching. So that's why I say it is very highly interactive. So when we give you some assignment, please, we will request one of you to share the screen and show us what you are doing. We will also send presentations to you. We have working files that we shall share with you in your emails at the end of today. And also the usual ones are certificates, and also the CPD hours. If you are a member, the CPD hours will be credited automatically on your account. And also the certificate will also go to your account. So we believe all that will be good for all of us. So in case I have not mentioned any, we will, it may be mentioned in the future somewhere in the interludes, in the breaks I've mentioned, and then we are able to remain on the same page. Otherwise, I want to thank you all for coming in time and for being here with us. And allow me, ladies and gentlemen, to introduce the chair for the session, rather the presenter, and then he will take on the training. You are able to see my screen. The presenter is CPA Godfrey Kakara, and those are his qualifications. Godfrey is a founder and team leader at That House Business Solutions. And I believe some of you have interacted with him in our platforms, in our training platforms on Excel, advanced Excel. And as I introduced him, something that he told me to emphasize is that this training is not for first-time people who are interacting with Excel. No, you should have basic understanding of Excel functions. The basics you did in your computer lessons, and majorly what you use currently. But if you want to have deep understanding of advanced Excel and how you can use it to do a lot of work, to add value to your organizations, to your clients, and everyone you interact with as a professional accountant, then this is a training. So I will not go deep into his profile, but as you know, he's an experienced Excel content developer and trainer. Currently, he has developed a wide range of complex financial models, such as IFRS 9 model, and this is still a monster for most of us. And recently, I was reading an article from the Global Knowledge Gateway, and someone was hinting, saying that COVID-19 found us not prepared for IFRS 9, and yet has been around for more than 2 years. So possibly, should you need more information about the model on IFRS 9, then he is also a very important person there. So Godfrey, I want to welcome you on behalf of the Institute to take through the training. And also I want to request the colleagues, the participants who are out there, to warmly welcome the presenter for this session. You can welcome him by clapping hands, but I know in your hearts you have welcomed him. Godfrey, you're welcome. Thank you.
Yeah, thank you. Thank you, Ambrose, and thank you all CPAs who have taken time to attend this session. Our training today focuses mainly on financial reporting. So like Ambrose said, it is not for first timers. It's not some introduction to Excel training, nor is it an introduction to accounting. So you must have some basics of Excel, and you must be able to know what accounting is all about. So we'll be doing a lot of things to do with accounting and a lot of things to do with Excel. So it's a combination. So members, you're welcome. And before I dive into this topic, maybe if you can just, in the Q&A, just drop in your expectations. Then as I run through, I will be able to address some of them if they are not part of my menu. So straight away, I'll go into a small presentation before I start the actual training. So that we all know what we are facing today. Let me share a screen. I hope everybody is able to see that screen. Well, so this presentation is brought to you by Data House Business Solutions, and the presenter is myself, Godfrey Kakara. And our mission at Data House Business Solutions is to help accountants and other professions work smarter using Microsoft Excel. You know, most people have computers in front of them, but we do so little with them, especially when it comes to data. Most times people are either using them for just writing reports, and then when it comes to serious stuff like Excel, we're just scratching around. So we believe that improving productivity at the workplace should be a very serious goal for anybody. And through that, we help our clients get the requisite Excel skills to get those mechanical tasks done faster. And of course, you are able to save a lot of time in that. So our approach is that we focus on key Excel functions and formulas that are able to enhance productivity by simplifying and automating tasks at your workplace. Before COVID came in, you can see those were the kind of classes we're having, physical, and the numbers were growing every time we would have a session like this. But I can also see that today, technology has brought us to interact with people who would not be actually in this kind of session. So those of you who are first-time participants in this kind of training, you are welcome on board. Our clients, as you can see, we are a mix, corporates, NGOs, government, they're all mixed up there. So we have interacted with quite a number of you out there, and we are grateful for the opportunity you keep giving us. And we're always available to share more with you. So it should not be a one-off interaction. If you need us, please give us a call. So today's session objective is simple. My role is just to guide you on how to use Excel, tools and formulas, so that you are able to map a very detailed general ledger, as we'll see. And once you have mapped that detailed general ledger, you should be able to come up with the trial balance, income statement, and balance sheet. And of course, this should also have some variance analysis, the notes to your accounts. We will also be able to do some charts and edge some accounts. So you can see we have, in a short period of 3 hours, we are going to do a lot of stuff. When I open up the file, I'm sure to some of you it will look like it is not possible to do it in 3 hours, but we'll see. I think it is possible. So we should believe it is possible. In our toolbox today, we don't have so many formulas. So if you're expecting that we're going to teach so many formulas, no. Like we said, we focus on a few that are able to add value to what you do. And for you to be able to add value to your financial reporting task, I think these 8 tools are very important. The first one is Max. This will help us find the year end based on the date column in the general ledger, because they just give you a general ledger. You don't know what the year end is in there. So for you to find the last transaction there, you'll be able to use the Max. Then we'll use the Vlookup. This will help us map our chart of accounts with the financial statements and general ledger. And of course, the sum function is not new to anybody who has ever touched anything to do with Excel. We always do sums. So this will just be helping us to get subtotals and grand totals for each section in our financial statements. The sum if, very important function, which will help us pull through totals for each line item in our trial balance and financial statements. And then we shall also look at if error function, which will help us clean up any error messages that we do not want to be displayed in our reports. And then conditional formatting will help us highlight favorable and adverse variances in our financial reports. Then we have pivot tables, very powerful tool in Excel. And of course, we can't teach everything about pivot tables in this session, but I encourage everybody attending today that find time to learn more about pivot tables. So pivot tables is like a second alternative to help us extract a trial balance, but most importantly, it will be able to help us extract the notes to our accounts. And then there's related to that, pivot charts. This will help us generate charts for monthly revenue and operating expenses. So in summary, that's what we're going to do. And as you're aware, this is a virtual training, so you will allow me to present. Then at some point, I will be able to invite questions. Then you are able to throw questions, I will answer, and then we move on to another session. Okay? And like I said, if you have expectations, please use the Q&A so that we are able to know what your expectations are. And if they are not part of what we have prepared, we'll find a way of meeting those expectations. Okay. So this one, I'll stop sharing it, and then I bring now the real Excel file, and we start the real journey into financial reporting with Excel. So allow me share the Excel file. So this is a file we are going to use. And we're going to start with a very detailed, I hope everybody is able to see this. We're going to start with a very detailed general ledger. And as you can see, it has 5,345 rows of data. So it is relatively big, but not very big. So from this detailed GL, we want to come up with something like this. We'll have financial reports, something like that, summarized like that. We'll have to derive a chart for our monthly revenue to show revenue on a monthly basis. Then we'll also be able to do some aging of accounts receivable. And the toolbox, I've already shared it with you. So those are some of the formulas we'll be using. But first, let's understand what is in this GL. Column A has all the accounts this person has been posting to. Column B has the sub account. Column C has the payment type. Now, column D is a very important part of every GL, and I'll take time to explain everything about column D first. There's no transaction, no accounting transaction that is complete without a date. We always tag every transaction to a date. Now, most of us don't understand what a date is, at least from previous interactions with members in the fiscal sessions. Most people don't understand what a date is. Now, for first timers, a date is actually a number. So if you didn't know a date is a number, most people think it is anything separated by either a slash, a dash, or whatever it is to be a date. But in Excel, a date is actually a number. And these numbers start counting from 1st of January 1900. So 1st January 1900 is allocated number 1. Okay, and then we count onwards up to today. So if you enter today's date, and the shortcut to do that is Control semicolon. If you enter today's date, you'll be able to know how Excel interprets a date. And because dates are numbers, you can see that it is aligned to the right. So for the computer I'm using here, which is using the American setting, it starts with the month, the day, and then the year. Now, if I change this to start with the day, and then I go to the month, and then the year, it will also get aligned to the right because today is 11, and 11, it will interpret it as November. So if I format these two dates, just to show you in detail, you find that they are not the same. One is saying 11 September, and another one is saying 9 November. So pay attention to the dates and always know the computer settings for the date settings for your computer. If it is British, then you need to have those dates in that format. If it is American, then you need to have the dates in that format. So once again, dates are numbers, and these are numbers counting from 1st January 1900. To quickly know that this is a date or not a date, you can always highlight the date column, format those as numbers with a comma style, which is found under number, styles there. If any of them does not change to numbers like I've shown here, then you know that that is text and is not date. So if it is text, then you will not be able to do any serious analysis of that data based on dates. So that is very important. And I hope we all take note of that. So we move on. Column E has, I think that's the number of the transaction, the adjustments, then the name of the client, then there's a memo, there's a split there in column H. But now let's come to column J. This is where our debits are. And then column K, that's where our credits are. Now for us to be able to do serious analysis of this GL, we'll have to subtract the credit from the debits, because credits are normally negatives and debits are normally positives. So in this column, we'll be doing a simple formula equals the debit column minus the credit column. Okay, but before that, all accountants know that anything to be taken seriously, the debits must be equal to the credits. So we do a quick check. If I highlight this column J, okay, down here it should be able to give me the sum. You can see here, 3,204,043,230. So I come and do the same for column K. If the two are not agreeing, then automatically there is a problem, because naturally our GL should be balancing. The debits and credits should be equal to 0. So here when I say equals column J, which has the debits, minus column K, which has the credits, and I copy this down, this column should add to 0. And I think that is shown there, it is 0. So we are fine. Our GL is okay, and it is something that we can work with. So what we'll be doing next, after some explanation, is to identify from this financial statement income, cost of sales, operating expenses, and all the way down to the trial balance. If I'm to look at each of the accounts in my GL, I should be able to tell it that this accounts payable reports to a line in my financial statements called current assets. So here, I should be able to come and put in current assets here. If I find anything else maybe that relates to operating expenses, I should be able to come and state that that line or that account should report to operating expenses. So that's what is called mapping. And we'll do that shortly. So I think I've run through the GL. So now we can start. First thing is, like I said, we have about 5,345 rows of data. So in these rows of data, we don't know which item is first, which item is last. So we want to find out what is our year end. That's the first thing we're going to do. What is our year end in this data? And like I said, in our toolbox, we had a formula called max. So max will find for us the highest value in a range, the maximum value in a range, and that range will be our dates. And a few minutes ago, I was saying dates are actually numbers. And I said these numbers start counting from 1st January 1900. So I can as well use the max function or formula to find out the last entry in this range. So if I come to worksheet like this and I type here equals max. Now, when you type equals max, and if you are doing this for any other formula in Excel that you want to learn, before you open brackets, it gives you what that formula means. So max returns the largest value in a set of values. It ignores logical values and text. So if there's text in that range, it will ignore it. If there's a logical value, it will ignore it. Now, when you open your brackets, max gives you how to work with your values. So it says max, what is the first number, second number, third number, whatever. So here we have a range, and that range is in my GL. I come to GL, and I'm taking column D, which is my dates. I want to get the maximum date in there. So when I enter, it gives me 43,465. Remember, we said dates are numbers. So when you see 43,465, you should not get scared and say, but I've not got the date I'm looking for. All you need to know is that dates are numbers, and with the correct formatting, you can always get the date you are looking for. So how do we apply formatting to this number to get a date? When you look at your ribbon, from left to right, under the Home tab, in the middle here, you have number formatting here. There is an arrow here at the end. If you click on it, it will bring the Format Cells dialog box. And in that Format Cells dialog box, if you go and pick date, it will give you all the date formats that are there. So now we can pick any. We can pick, for example, what we're used to. Let me use that 14th March 12. Then I say OK. And you can see now that changes to 31st December 2018. So when you see numbers, numbers are dates. Dates are numbers. And with correct formatting, you can always get your date. So this GL, the last value entered there is on 31st December. So that is our year end. Okay. If we want to get the first one, then we'll use the equals min. That is for minimum. Same arguments like the max. And if you go to your GL, you find that it gives you 43,101. If you go and format that like we did before, January 2018. So this GL runs from 1st January 2018 to 31st December 2018. So we have a whole year of data. And I think with that, we are fine to go. So if we go back to our GL, we know that in this column of date, we know that it starts from 1st January and ends on 31st December. So our year end is automatically 31st December. We have also looked at the debits, which we found out add up to 3.2 billion. And we have also looked at the credits, debits 3.2 billion, the credits also 3.2 billion. So we have agreed that our debits and credits equal. And when we do debit minus credit, we get the balance here. And that balance adds up to 0, which is here. So that means our GL is fine. So if you have a question, you can post it in the chat. I mean in the Q&A. I'll be looking at it as I move on. If there's no question there, so I'll move on to the next item. So the next thing to do is to map our chart of accounts, which we have here, with our financial statements, which we are going to generate. These are the financial statements. Let me just increase the display here. So we have income, we have cost of sales, operating expenses, fixed assets, current assets. So we need to say from here what our income will be, not number 1. So maybe our cost of sales will be not number 2. Our operating expenses will be not number 3. So we are allocating notes to our financial statements. Fixed assets may be not number 5. You can use any other way of identifying this, but training, let's use that. Current assets, not number 6. Our equity will be not number 7. Profit for the year, this will come from the income statement. I will explain that shortly. Current liabilities, not number 8. So in brief, that will be the setup of our financial statements and notes. So these are the financial statements we're going to generate. We'll put values for income there, values for cost of sales there from the year, values for operating expenses there, and values for all the other items. Then in here, we also have a budget, which is here. We can also test it, whether it adds up to 0. Yes, the sum is 0, so it is also fine. So again, we'll also pull the budget values there. And then we'll be able to pull the variance, that is actual minus budget, to see whether we have over and underspent or whatever it is. Then we'll do a percentage there. And like I showed before, that percentage will come with an arrow pointing which direction we are moving. So that's what we're going to do for that part. Now, for us to be able to get this part worked out, we have already put our notes here. We need to identify which accounts in our chart of accounts, this one here, which accounts report to number 1 here, which is income. So you come and run through your chart of accounts and identify all accounts that report to income. So for example, this one, we know that this is an income account. Miscellaneous revenue will also, that is income. Other income will also say that one is an income. So we keep doing that for each of the accounts. And of course, all these 3 or whatever number, these are all not number 1. So we'll keep doing that for all the accounts in our chart of accounts. I think this is the hardest part of it, because I know some institutions have a chart of accounts running into probably thousands of rows, but if you look at it carefully, there's always a guideline on how to do these things. So you map your chart of accounts and not waste time. I've already done that here. So we'll end up with something like that. You'll have mapped all the accounts from the first account in your chart of accounts to the last one, indicating which financial statement line they should report to and which note that will be. So this is called mapping. We are connecting this chart of accounts to these financial statements. So if it is income, we'll know which accounts report to this income line. If it is cost of sales, we know which accounts will report there. So that's why we take the trouble to do all this. Now, once we have done this successfully, then we are now going to use this chart of accounts as the control to map everything else, because everything else will have the account, which is in column D here. So even our GL, if you look at it, it has all these accounts that are in our chart of accounts. So all the accounts they post to here in our GL, all these accounts must be in our chart of accounts. Otherwise, there's no basis of posting if that account is not in your chart of accounts. And that's why we start with the chart of accounts, map it properly, and make sure that your chart of accounts is speaking to your financial statements. Okay. Let me just see if, why have I jumped note 4? Did I jump note 4? Maybe it was just an error. 1, 2, 3, oh, sorry. So this should be 4. So my apologies for that. 5, 6, and then 7. So apologies for that. Yes, I should have taken the right order. So just trying to look at some of the questions in the chat, in the Q&A, and see if I can address them. Kindly explain the concept of data cleaning and how it can be done with Microsoft Excel. That one is not for this session today, but data cleaning is about you having your data organized, because what we have here is a download from an ERP, and the data that came out was fairly clean. But what that means is that you must have a block of data at the end of it. Remove any blank columns, remove any blank rows. And by blank columns, we mean from top to bottom, and rows from left to right. So you clean up all that. So cleaning up, removing all irrelevant fields in your data, and then you do the analysis. But that one is best covered in our data analysis and reporting training. Kindly share the files to follow along. I think that is for the Institute to do. If this is being imported from QuickBooks, don't we need to clean it first to have it aligned? Yes, definitely. You need to clean it up. There will be a lot of redundant fields that need to be removed. Please explain again what the term mapping means. Now, mapping means you have financial statements here. Okay? This is a summary of everything you want to do. But this summary does not have the details that are in your GL. So your GL, you know, that has accounts. And those accounts, all the accounts in the GL sit in your chart of accounts. So the easiest part to work with is your chart of accounts first. So for you to map, you are able to identify that income is a line in my financial statements. And any account, for example, revenue, should be identified with where it reports. So that's what the mapping is about. You are identifying all your accounts as they sit in your chart of accounts to the financial statement line they should be reporting. So you're simply saying miscellaneous revenue should report to income. Other income should report to income. Freight costs will report to cost of sales. So you are connecting, or you're mapping, that's the term, your chart of accounts with your financial statements. Now, somebody will ask, why don't you use the GL to do the mapping? The GL is so detailed. We must first get the summary of all the accounts in the GL, which is actually our chart of accounts, and then map them. And then using some other means we'll be able to map what we see here in our chart of accounts and then connect it with our GL. And if you look to the right here, I'll be bringing that here for the financial statement line, and then I'll be bringing the note there. So for each of these accounts, we'll define where they report and which note that is. Okay, let me just see if there is any other question to answer. The ERP-ON accounting package has the option of generation of financial reports. Why do the analysis manually? Yes, ERPs will give you income statement, balance sheet in certain formats, but that's not all the information management is looking for. I think management looks for far more information than what ERPs give. And that's why most accountants end up getting their information into Excel to be able to produce those management reports. Even year-end reports, by the way, because sometimes the ERPs don't give exactly what you're looking for in the format you want. Depends how good the person who set it up is. And you know, the biggest contradiction between the setup of ERPs is that the people doing the setup most times don't understand the accounting side of things. The IT guys, they're very good at what they do, setting up systems, but they don't understand your needs. Now, you have the accountant sitting on this side, he knows what he needs, but he can't guide the IT guy to do what he needs. So you find that most times ERPs end up being just simply databases. And when it comes to reporting, Excel comes in to save the day. Hello, will you share the presentation hereafter? Definitely, the Institute will share that. Shall we receive the video recorded? Yes, I'm recording, and the Institute will be able to share that as well. Okay, let me now move on. If I've been able to map my chart of accounts as it is here, then I should be able now to move this information to my GL. Okay. And the only savior for me to do that is a formula called Vlookup. So we'll look at a formula called Vlookup. This is an inbuilt formula, and it looks at a specified value in the leftmost column of a specified table and returns the value in the same row from a specified column in the table. Too much English, but we'll see how to simplify that. The common example I always give is a list on the notes board. There has to be a lookup value. What are you looking for on that list? There has to be a table you're looking from, and that is the list on the notes board. So if you find the name you're looking for on that list, then the other thing is to read off either it is the marks or whatever information that there is to the right. And like the list on the notes board, things are arranged from left to right. So you go on the notes board, you look for Godfrey Kakala. You will either find him on that list or not. If you find him, you want to get his score for mathematics. Maybe mathematics in that list is in column number 3. So you move to column number 3 for you to be able to read that score. So in simple terms, VLOOKUP, you must have a lookup value. You must have a table array, and then you must also have a column index. And then the other thing is whether you're doing an exact or approximate. Now, most people who use Vlookup, I think, do exact, but the power also lies on the approximate. We'll look at that shortly. So if I have a table, like now we have our mapped chart of accounts here. This is now going to be our table. So if I'm in the GL and I'm looking for accounts payable, this item in row number 2, and I'm looking for it from this chart of accounts, okay? So what Vlookup will do is look for accounts payable from this whole chart of accounts, okay? And of course, it looks from left to right. So once it gets accounts payable, then it will move to the right. It gets accounts payable there. So you ask it to find, you want to find a financial statement line or the note. So if it gets accounts payable, it will move to the right and tell you that's a current liability and is note number 6. So in here, we must identify our table. It has columns, which is this, with accounts being column number 1, financial statement being column number 2, financial statement line is column number 3, and note is column number 4. So when it comes to that item of column index, you are supposed to identify which column you want the formula to read from. And by that, you simply type in either a 1 if you want the account, a 2 if you need the financial statement, a 3 if you need the financial statement line, and a 4 if you need the note. Okay? So that is how Vlookup works. So we are going to do a simple example here first. Let me just do a simple example. So let me say I have just a few months there. So I have values there randomly generated. So let's say this is sales for maize, and these are sales for beans. Okay. So what I want to find out here is what were the sales for maize in which month, in say April. Okay. So I'm going to look for April from this table here. Let me give it a color. So I'm going to look for April from that range. Okay. And once I find April in that range from this table, then I'll say return what is in column number. This is 1, that is 2, this is 3. So maize is in column number 2. So column number 2. And because this is text, I want an exact match. So this is how the formula works. Equals Vlookup. And like I told you before, you complete the formula. It always gives you information. Most times we ignore this screen tip, but try to read it, it guides. So this looks for a value in the leftmost column. So the leftmost column is column C here of a table, and then returns a value in the same row. So if I'm looking for April, so it will come to that row, April, And because I'll select 2, which is called column for maize, then it will return the value in that row for maize, for April, which is 210. So VLOOKUP, you open brackets. So you'll see the first thing to be highlighted here is the lookup value. So this means, what are you looking for? What do you want to find from wherever you want to find? So the lookup value is, I want to find April here. Okay. The May sales for April, comma, table array. From where do you want to find that value? So my table array, I'll come and highlight that yellow section. And it's good always to look up that section by putting the references, comma. So if you find April in that range, which column do you want to read from? I want to read a column for maize, so that is column number 2. So I type a 2 there. That's my column index, comma. And then this is where it asks you whether you want an approximate match or an exact match. And I want an exact match. So exact match is represented with or by false. So you can either type in false or come and select false. Then close your brackets and enter. So you see now, it comes here, reads through these items, finds April, goes to the second column, which is specified, and reads the value, which is 210. If you change this value, say to Feb, see now it changes. So it comes, finds Feb, which is here, reads through, and comes and finds the value for maize, which is 675. So that is how VLOOKUP works when you're using exact match. Now, when you're using approximate match, those must be values. Okay? Like, for example, we have our payroll bands. So from 0, you move to, is it 235,000? From 235, you move to another value, which I don't know whether it is 315 or whatever it is. From that, you move to 410. Then from that, you move to 10 million. So what this means is VLOOKUP will always approximate. Nobody earns a salary that is exactly this. Okay? We all earn salaries that are somewhere in between those figures. So for example, if somebody, so this is 0%, 10%, and then 40%. So if somebody earns, say for example, 90,000, you cannot trace 90,000 just using your naked eye from here. It just falls within a range somewhere here. Okay? So 90,000 is between 0 and 235. And Excel will approximate and say that will be charged at 0%. If somebody gets 235,000, then it is just at the edge there, and then it will be 10%. Let's look at it practically. Say somebody earns 120,000. So we want to get what rate should be used using VLOOKUP. So we have this small range. So again, equals VLOOKUP. The lookup value is this 120,000. The table array where you are looking from is that yellow section there. Normally, if you are copying this formula somewhere, always lock the references, comma. The column index is here. We only have 2. This is the first one. That's the second one. So this is 2. comma. If you're doing approximate match, you may continue and put this true, or you can just close your brackets from there. If you don't put anything after this, Excel always assumes you're looking for approximate match. So you find that that is at 0%. If I change this value now to 235, you see now it moves to 0.1, which is 10%. So it is able to read. So from 235 to 315 to 314.999, whatever it is, it will be at 10%. Anything above 10 million will be at 40%. So if you change this to 10, see, I'm adding just 1 shilling after 10 million, and you can see this is already 40%. So that's how Excel Vlookup formula works. You can do an exact match. You're looking for that exact figure or text, or you can do an approximate match, and you're looking for a range. So now let's go back and apply this to our mapping. So we have our GL. We want to identify each account in this GL where it should report. And the only way we can do this is to use Vlookup with exact match. So the formula here will do equals Vlookup. What are we looking for? Lookup value. The value is this account in column A, A2. So we want to find where that account should be reporting to, comma, our table array. Where should we be getting that? We come to our mapped chart of accounts. I will select the entire section there, the entire chart of accounts. And please make sure those references are locked. The one you're picking from your chart of accounts, make sure that is locked. So you put your $signs to lock those references, comma. When I look at the chart of accounts, the account is column number 1, the financial statement is column number 2. What I want to return is in column number 3. So I'll type there 3. And I want an exact match, so I'll put a false, identify exact match, or I'll go and select from the drop down and then enter. So when I enter, you see that is current assets. If I just copy, because all these are accounts payables, I mean current liabilities, it will still bring the same. So I'll copy this all the way down to the bottom. So you'll find that at a certain point, it is changing to current assets. So they are all equity, everything is there. So I've now connected my chart of accounts with this GL. And now my GL should be able to speak to my mapped chart of accounts here. Okay? So we can do the same for the notes. So you come here and say, again, using Vlookup, equals Vlookup. What are you looking for? Again, it is the same account number here, comma. What is your table array? The table array is the mapped chart of accounts again. So I'll go select the top of it. Select that first item. I do my Control Shift, then arrow key down, then arrow key to the right. Quickly select. Then F4 to lock up that range, comma. My notes are in column number 1, 2, 3, 4. So I'll put there 4, comma, and you can come here and select false, or you can just type in false there. And then enter. So that is note number 6. I copy that down. And now I have every account in my detailed GL identified with the financial reporting line and the relevant note it reports to. Okay, let me just check if there are any burning questions to answer. How do you look up with a $sign? F4, function key 4. When you hit it once, it will bring $signs in a flash, but you have to be careful which kind of referencing you want to do. Cell referencing is a topic of its own. Those who have attended the 2-day sessions will always take you through that, but it's a very important thing to learn. So please learn to reference, because more than 90% of the errors start from poor cell referencing. Must you always put your lookup value on a different cell to be able to use the formula? Must you always put your lookup value in a different cell? Well, it depends on the structure of the data you are using to analyze. It may be in a different cell. It may be an item you want to hard code in your formula, but hard coding is not encouraged. It's one of those things you should avoid. So it depends on the item you want to analyze. Sound is breaking. I don't know whether it is on my side, on the other side. Please check your connection. I'm sure ICPA has the best gadgets here. So that's why I had to drive here this morning, so that I'm not to blame for this session. How do you automatically lock down all values? I think I've answered that. Use F4. Instead of locking $sign, how about using name ranges? Yes, name ranges are good to use, but you know this is a 3-hour session, so if you pack everything you want to do, you may not finish, so you have to do the basics. So name ranges, we always do them, but for now we'll just do the cell referencing. The ERP or any accounting package has the option of, I think I answered that. Will you share? I think all these have been answered. Unless if, okay. So now we have been able to connect our chart of accounts with our GL. Let's come back here and do some basic work here. We're now going to learn another very, very useful formula. So Vlookup is very useful, but the next one is as useful. The two of them for this session, please find time to go and do more research about Vlookup and the next formula I'm going to teach, because these are the two formulas that almost drive the entire session we're having. So the next formula we're going to look at is called sum if. We all do sum, where you just add up a section of items. I think anybody who has used Excel must have done sum. Unless if you are still at that level where you just say equals this cell plus that cell plus that cell. But most times this sum, we have all done it, where you just say equals sum and then you highlight the items you want to sum. But that's in its simplistic form. The more advanced part of it is to do a sum with a criteria. Conditional summing is a condition that must be met, a criteria. So that's where we do sum if. This is again an inbuilt formula. So we use SUMIF to sum values in a range that meets a criteria that we specify. Okay? So for our purposes here, if I come to, say for example, our detailed GL here, I mean our chart of accounts, I may have our debits there. I may also want to bring our credits there, for example. So what SUMIF does is there will be a range in my GL that has an item called revenue. And that in my GL is column A, because that's where all the accounts that have been posted to are sitting. Okay? So I'll instruct Excel using SUMIF to go and examine column A, and wherever it finds an account called revenue, it should add up those values and give me a single value, which is a total of all the values that are labeled revenue as debits in this column. So the formula works like this: equals SUMIF. So here it says add cells specified by a given condition or criteria. When you open brackets, the first thing it asks for is a range. This range is usually in your database. I mean, this is going to be in your GL, okay? So this range here, you'll find it in the GL. Then once you have put in the range, the next thing it will ask for is the criteria. So when it runs through that range you have identified in your GL, what criteria should it be looking for? And for this purpose, it will be that account called revenue or labeled revenue. So whatever is here must be spelled exactly as it appears in the GL. So then here it says if it finds anything matching that criteria, what should it add up? Maybe you want to go to your GL and add up the column that has debits. So let's do that practically. Equals SUMIF, open brackets, the range is in our GL, column A. So I'll just highlight the whole column A. Then F4, those who were asking how do you lock, F4 will lock that, but also please check your keyboard. You may find that F4 is not accessed straight away by clicking F4. You may have to go through Fn and then F4. So SUMIF, the range is column A, comma. Then it says the criteria. The criteria is on my mapped chart of accounts and it is revenue. Okay, so I'm going to copy this formula down in that column, so I'll not bother with locking that one, comma. Then it says the sum range. What do you want to add up if you find anything that matches that criteria? I'll come back to my GL, and the sum range is, I want to find all the debits, so that is column J. Again, I lock that. Close brackets, then enter. So you find that there it is telling me there's no debit. So when I copy to the next, but if I copy downwards to all the other accounts, you'll find that the accounts that have values, the accounts that don't have any, that have zeros. So all those are my debits. So always when you get your numbers, remember to format them, put a comma, and make sure they, for now, 0 decimal points. Okay, so we have brought in the debits. Let's also bring in the credits using the same formula. equals sum if, open brackets, the range, like I said before, that is our column A here, where all the accounts are sitting in our GL. So column A, I lock that reference, comma. My criteria is in the mapped chart of accounts, and I'm going for that first item, revenue. So I'm only picking that, comma. So I'm picking this because when I copy the formula down, it will run to the next, up to the end. Then sum range, this time we want credits, so we go back to our GL. We bring in the credits. F4, lock that, and then enter. So you can see we have some values, some are zeros. Again, remember to fit your values well. So we now have that. So this is like our TB. You can do your sum for the debits, and then for the credits. And are the two agreeing? I think they do. So your debits agree to your credits. So for those who want to, you may have adjustments to make. That's a good start. So you have your maybe adjustments there. Then you'll again have your debit, credit, and then at the end of it, you do the movement. Okay. So we now see that our chart of accounts here is speaking to our detailed GL. We're able to pick the figures very quickly without using calculators here. Okay, so now let's go to, let me first check any questions if they are there. Clarify on the relationship between account column in chart of accounts and account name in detail. Yes, whatever is in the account column in the chart of accounts. Remember, your chart of accounts drives what you post to your GL. So whatever is in the account column in your GL must be in your chart of accounts. You cannot have anything in your GL that is not in your chart of accounts, unless if you have created one after you have extracted the information from your ERP. Because your chart of accounts is the one that directs what is posted in your GL. If an account does not exist in your chart of accounts, then your GL will not be able to pick it. It will not even be able to process because it will be asking for an account which is always picked from your chart of accounts. So that's the relationship. The two, one is a summary of the other. So the chart of account is a summary of everything that posted in the GL. This question is coming up several times, but I did answer it. The ERP or any accounting package has the option of generation of financial reports. Why do we analyze manually? And I've said not all ERPs give management the kind of information they are looking for. And for you to be able to give management that information to make decisions, most times we get this information in Excel and do the analysis manually. And I also did say that your ERP is just as good as the people who set it up. If the people who set it up were not good at accounting, most times you'll find that it just ends up being a database. And you find that there's little use to it other than just giving you, at best, a trial balance. And then accountants start from there and spend some sleepless evenings and nights trying to do their financial statements. So I think that has been answered. So now let's go and get our financial statements worked out. Because now we have everything to create our financial statements. We have in our detailed GL column M, which was mapped to our chart of accounts. So we have been able to identify where each of the accounts in our detailed GL should report and which note that is. So using sum if, as we have just done, we should be able to do that. But before we go there, just allow me run through something small, because it causes confusion sometimes. We know that from our famous accounting equation, assets will always equal to your liabilities plus equity. Now, when you're posting to your ERPs, the assets go in as positives. Okay? So these ones go in as positives. The liabilities go in as negatives, because they are credits. And the equity also goes in as a negative because it is a credit. So that's why when you come to your mapped chart of accounts here, you find revenue is a credit. Okay? Now, when we do our, what we did before, when we say equals debit minus credit. So if you pull through your figures from the GL, you are going to end up with revenue coming as a negative because it is a credit. Okay? And also your liabilities will come as a negative because they are credits. And equity will come as a negative because they are credits. So we have to be careful when we pull through these figures and know where to change the sign from. Okay? And then we must also make a decision. How do you want your expenses to come on your income statements? Do you want them to appear as negatives, or do you want them to appear as positives so that you do the normal math? So you have to agree on those. But for now, I'll just assume that what is going to come through to my financial statements here, revenue, I'll multiply it by -1 to change it to a positive. Cost of sales, I'll do the same so that it becomes a positive, a negative. Operating expenses, I'll also change it to a negative. My assets, that one will come in the way they are. Profit for the year, this one comes from the operating profit up there. So now we have information to go. Let's look at income. You have your GL here, properly mapped. Financial statement line is there. The note is there. The figures you want to pull through are going to be these ones in column L, where you have already done your debit minus your credit. Okay? So if we come to this worksheet and we want to get this, the only way we can get a value here is using sum if. So equals sum if, open brackets. The range we want to examine from our detailed GL here, I can either use the notes, so column N, or I can even use column M. But for now, let's use column M, the financial statement line. F4, comma. So the next thing it is asking me for is, what is the criteria? I'll come back to my financial statements here and I say, the criteria is run through that and find anything labeled income. So C7 becomes my criteria, comma. So once it finds from that column anything that matches my criteria, what should it add up? So here it will come and add up column A. Lock that up, close brackets, enter. Now you see, like I told you, because income is posted as a positive, as a negative, a credit, so here it is appearing as a minus. So I can either put a minus at the beginning of this formula to say minus sum if that range, that criteria, and then that range. Okay. So then I can copy this to the next, to the next, and only apply this where there is okay. But here where it is assets, I don't need the negative sign because this one must come the way they are. So that one I remove, that one I remove. So you see, as fast as that, you are able to get your figures through. So then the next thing is to do the subtotals. What is your gross profit? You add up those two. Income, because this is a negative, so it will be a plus. So income plus cost of sales. If this was a positive, then it will be income minus. But since this is a negative, this is income plus. So that is sum. Okay. And then operating profit will be gross profit plus your operating expenses. So sum is 430,985. Okay. So we come here, we add up our total assets. 376, 826, 790. Then here we have a line which must come from our income statement, profit for the year, so equals 430,893. Bring that one there. And then we add up this 376, 8. And you'll find that your assets and your liabilities are adding up nicely. So we already have financial statements there. At least we have the income statement, we have a balance sheet that is balancing. Okay, let me check out the chat, the Q&A. Thanks for organizing. I joined over an hour late. Please confirm if you share the video. Yes, the video will be shared by the Institute. This question, other question has Ismail, we have answered that question several times. I don't know why you are posting it. Why is the equity negative? Yes, maybe these guys overdrew their accounts, I don't know, but that's what is in the data. So that's what is in the data. Maybe they had some drawings. We'll examine it using note 6. So please wait. When we do the notes to the accounts, I think that should be able to explain to us why this equity is negative. So we'll be doing some notes to those accounts. Will you share the presentation thereafter? Yes, it will be shared. Yeah, I think so far that is what is in the Q&A. Okay. Let me now I know we have a budget here. So we also need to map this budget, okay, with our chart of accounts so that we know where each of these lines will report, and then we'll be able to connect this budget to our financial statements here. And then we'll be able to get the budget figures. So for purposes of mapping, there's no other formula we are using other than Vlookup. So again, we look for that revenue from the mapped chart of accounts. And if we find that item revenue, we want column number 3. Okay. So here you come. It was Vlookup, open brackets. So what are we looking for? The revenue, comma, from where? Mapped chart of accounts. Lock that range, comma, which column do we want? Column number 3, and we want an exact match. So as easily as that, we have all the items in our budget identified with where they should be reporting to. So once we have done this, again, we can now just come to our financial statements using sum if in that column. So this will be equals sum if, open brackets. So we come to our budget. The range we're examining is column D, F4, comma. Come back to the financial statements. If we find column D, compare it with what you have in C7, comma, and if the two are matching, then give us the value in column C, F4, close brackets, enter. Again, revenue is a credit, so this will be minus. Format your numbers so that they appear. So I copy that, paste it there, paste it there. Then I'll come and so when I bring it to the assets part of it, I move the negative so that I have absolute figures there. Then you can now do your sum totals. Sum totals. So after that, you have 318, your assets again are able to balance with your liabilities and the equity. Okay, so you now have your actuals and your budget on the same page, and you are able now to do the variance to find out by how much did we miss the target. So here, if we say equals the actual minus budget, we should be able to get by how much in terms of Uganda shillings. So these people missed their budget by 56 million. Okay. Now, when it comes to expenses, you decide what you want to do. Do you just want to use the same formula, or do you want to change around? Because a lower expense is considered a good indicator. So here you may want to change the logic. Equals that minus This time it is budget minus. Or is it the other way? Yeah. So here we are able to save 1.1. We can use the same for here. Here we overspent by 14 million. Depends on how you want, but let's, for purposes of this training, let's just have a uniform formula so that we're not creating a lot of confusion for people who are following from far. So I'm just using a uniform formula. Actual minus budget. That's the formula I'm using to get. You can as well go and extend this if you want, but I'll just leave it there. Let's just extend. Okay. So that is your variance in value terms. Now here you want to do the percentage. So the quickest way to do it is equals actual divided by budget minus 1. So that gives you that, is it 8%? Yeah. So you may want 2 decimal points. So come and do the same for the balance sheet if you want. Equals actual divided by budget minus 1. Format that as a percentage, 1 decimal point. So there we are. We have actual minus budget in percentage terms. So what we want to do next, unless if there are questions in the Q&A, you at the end give a summary of the steps you've taken. There will be a video, it will be shared. You can always replay it as many times as you want. Why minus 1 when finding the percentage? If you don't do minus 1, it will give you 100 plus the percentage that you have, either 100 minus that, so this would be like 90, 92. So if you don't do this, that's what you get, 68 low. Okay, but you want to find out if you do minus 1, the actual movement. That's why we are putting the minus 1. Okay. Let me see if there is any other question in here that is worth answering. Okay. So next is for us to be able to put these arrows here to show which direction our variance is moving. So what we need to do here is first agree what will we consider as good performance, what shall we consider as normal, and what shall we consider as poor performance. So for example, we may say anything above 5%. Okay? Above 5%, we consider that as okay. So we say this is good. this will be highlighted by an upward arrow facing up. So that will be up arrow. So anything below 5%, so less than 5%, but greater than 0, we can say this is normal. So this will be a flat arrow. And then below 0, so this will be poor, with a down arrow. So this is what the guide we want to use. So if anything is above 5%, that is good performance. Okay. And there will be an up arrow to show that direction. If it is less than 5%, but greater than 0, then that's normal. Then below 0%, we're saying that is poor, and there will be a red arrow showing downwards. So for you to do that, there's a tool in our toolbox called Conditional Formatting. Okay. Now, conditional formatting enables you to apply special formatting to cells in your spreadsheet that meet certain criteria. Okay. It is often used as a color-based formatting to highlight, emphasize, and differentiate among data. And that's exactly what we want to do. We want to highlight so that by somebody just looking at our report can see the direction it has taken. Okay? So here will come, highlight these values here. Now, conditional formatting is on your home page, home tab, this home tab here. In the middle here, you'll see conditional formatting. So when you come here, conditional formatting, it says highlight cell rules. Okay. So you can choose either you want to do data bars, you want to do color scales, but for now we'll go to icon sets. So I'll go to the icon sets and I want this first one here. So conditional formatting, come to conditional formatting, icon sets, I want that one there. Okay? Now, don't be in a hurry to accept what it gives you. This is very deceptive. You need to think more deeply about it. So what does it? It does percentiles by default, which is sometimes is not correct. So we need to come back to conditional formatting and then come here and say, manage rules. Okay? And then here we come and edit that rule. So we want to edit that rule. You see it is using percent. And it is saying anything above the 67th percentile, it is going to give a green arrow. Anything below the 33rd percentile, it is going to give that. But we need to change this so that it matches the criteria we have described here. So this will be number. Okay. So when a value is greater or equal to, okay, 0 point, or you can put there 5%. Okay. So when, yes, when it is greater or equal to 5%, it will be shown a green arrow facing up. Okay. So when it is less than 0.05, which is 5%, but greater or equal to, we said 0, so we type there 0. Then it is going to be given a flat arrow, orange arrow, just flat. So anything below 0% will, so when this is less than 0, it will be a red arrow. So we put that, okay. Did I get it right, wrong? Or do I need to reverse? I should have actually done this whole column together. Conditional formatting, manage rules, edit rule. When value is greater or equal to 0.05, oh, the problem is here. The second part, this should also be number. I think this is where we got it from, number. Let's say, okay. Then apply that, okay. Yeah, I think that's fine. So we need to do the same for this. Conditional formatting, highlight cell rules, icon sets. Okay. So you see now, what it does is, this is below 0%. And we say below 0%, poor, down arrow. Anything above 5%, green arrow, up. Anything that is between 0 and 5%, flat arrow. So that's how it works. Quite simple, but adds a lot of value to your analysis. So just by the look of an eye, somebody is able to know where some improvement has been done and where we have performed badly, without even first looking at the numbers, what they say. So this is how you can use what we have in that toolbox to be able to do your financial reporting. So at this point, let me again go back to the chat room, the Q&A, and see quite interesting, simple formulas. Thank you. Thanks for the presentation. I'm first time attending on Excel training. Is there a way I can get more training about it? Yes. I'll be sharing our address and contacts. You can get in touch with us. There's a team of young fellows who are very, very enthusiastic, and they will be guiding you through a lot of those basics. Dear Godfrey, since financial reports are prepared with information from books of original entry, such as cash book and journals, please clarify how the concept of double entry is affected using Excel. Yeah, I think what we're using is already a double entry based example, because what happened here is we got a download from an ERP, which was done using double entry. So for each of the accounts we have in the GL here, there's a debit and credit to it. So that is exactly what we're doing here. So maybe you should pay more attention, and maybe you should find time to replay the video when it is shared. Change the type number. I don't know what that means. Percent to numbers, okay. Thomas Viencha, good to see you in this training. Can you clear so that you go through assigning arrows and conditions from the beginning? Okay, I will do that so that maybe if you missed out, you are able to follow. Very, very good training and very relevant. Please share video that will be shared. Ismail, I think You're making too much noise over this. I've answered it several times. Y-1, that one has been answered. For expenses, we may need to change the direction in the formula. Yes, I did say that, but I said for purposes of this training, let's just take a uniform approach. The budget and liability, the budget at liability is lower than the actual. Why is the arrow indicating it's good? Are we supposed to edit the rules always? Yes, you should edit rules, otherwise you'll get wrong interpretation. Let me find where I said the budget is lower. So if the budget is lower, I don't know which line here is speaking about, but depends. If, for example, my revenue is higher than the budget, that should be a good item, but I don't know which line item is talking about. Okay, so let me rewind on conditional formatting. So I've removed the conditional formatting. I'm back to where we started. So I know this column H is where I want to put my arrows. So I'll just select the entire column for this training. And I said for you to put those arrows, you need to have a guide. So here we are saying below, above 5%, that is excellent performance, and the arrow will be facing up. Below 5%, but greater than 0, that is like normal, it's expected. And the arrow will be facing, it will be a flat arrow, just showing you that this is normal. And then below 0%, we imagine that is poor, and the arrow will be facing down, maybe red in color. Okay, so once I've highlighted this, I go to conditional formatting. So I go to icon sets. I select the icon sets I want. You may want traffic lights. You may want all these. There are so many you can pick from. Or you may even want those network bars. But for now, let's go to that one. Okay. So when you do it, it gives you its own interpretation based on percentiles. And as you can see, it is saying that is normal. It does not agree with our criteria here. That one is also normal, not maybe yes, but. So now we need to edit what Excel gives us. So we go back to conditional formatting. And this is where you edit from. Down here, you'll see manage rules. So you click on manage rules. So it will tell you are using icon set based on column H. Okay. So I want to edit. So I'll click on edit rule. Okay. So once I've edited, then I now come and make my own definitions. Here it must be number. Both of them must be number. We're not using percentiles because Excel was using percentiles. So here we said 5%. So anything greater or equal to 5% will be given a green arrow. Now, these arrows you can decide to change. If you want the red one facing up, you reverse it from here. Okay. So you can always do the reverse from here. But green facing up is the right thing to do. Then when something is greater than 5% but less than 0, I mean greater than 0 but less than 5%, that will be considered normal with a flat arrow. And when it is below, that is poor with a red arrow facing down. So when I say OK and I apply, you'll see those arrows working out. Now, conditional formatting is a very powerful tool, especially if you are dealing with a lot of other things that, of course, are not part of this training, but find time, do some research about it, you'll find it very, very useful. It's one of those rarely used items, but if you get to understand it and use it well, it makes a lot of your analysis easier. So next, we are going to find, let me just check if there's any new questions coming in. Please have a look at the cost of sales. What is wrong with the cost of sales? If it is about the arrow direction, that one I said depends on how you interpret it. I took a uniform approach just to make sure that we move fast. Because the most important thing is knowing how to get those arrows. It's not about, so you can always go back and try to change the direction of those. Because I know what you're trying to say is that the formula here should have changed. Yes, and I agree. For example, here we should be saying it should now be budget divided by actual minus 1. So this is what somebody is trying to say, which is, of course, based on the information we have. This should be a favorable. That's what he wanted to say. But I just took a uniform approach for all of them. So if things are not working in the direction that you expected, please go, when you get the files, try to rework out the way you think it should, as long as you're following the steps and you get it correct. Okay. Let me now go to what every accountant does. We have our financial statements. We are balancing. And now we have auditors in the house. They need the notes to the accounts. So we must give them the notes to these accounts. And we don't want to waste a lot of their time. So the notes must be accurately extracted with all the details correctly displayed. So for us to be able to do that, the next thing we're going to learn is a tool in our toolbox called pivot tables. Now, pivot tables, probably the most powerful tool that sits in Excel. Those who have used it know how powerful it can be. But again, for you to be able to use pivot tables, there are some rules. So when you look at our toolbox here, a pivot table is a data summarization tool that is used in the context of data processing. So what does this mean? You have a very large data set like we do. We have about 5,000 rows of data, and we want to summarize this into something called notes to the accounts, something like you see here. So the best way to do it and the easiest and fastest way to do it is to use pivot tables. No formulas involved, and things work out nicely. So pivot tables are used to summarize, sort, reorganize, group, count, total, average, whatever data. So this tool is accessed on your insert tab. But before you even rush into doing pivot tables, there are some rules that you must observe. One, you must have a database that is clean. If you have a column like column A, it must have only accounts at the account names. So you cannot have somewhere with a split, then you say accounts receivable, then you start again. It must have account names from top to bottom. Okay? There has to be no empty rows, for example, like that, where you have a completely empty row from left to right. Okay? And there, it should not also have a completely empty column like that. And by empty column, we are meaning from top to bottom. At least let it have a column header. So every column must have a column header. So as you see, each one here has at least a heading to it. Even when there is no data below it, but there should be a heading to it. Okay. If you're going to use pivot tables to analyze dates, dates must be in the correct format. There should be no single entry in your date column that is not a date. Anything that comes in there that is text, Excel will automatically give you trouble when you are analyzing those dates, especially when it comes to grouping. It will not group. So please take note. Now, for you to be able to insert a pivot table and use it, make sure that you have all the fields you need to analyze. So we want notes to the accounts. We were able to map our detailed GL, and you can see we have the notes here. Every line item has been identified with a note it reports to. It has been identified with a financial statement it reports to. So then, with that in mind, we can now proceed to use a pivot table to extract our notes to the accounts. So how do we do that? How do you insert a pivot table? Step number one is you go to your Insert tab. Okay? If you don't want to use the Insert tab, there is always a shortcut, Alt-NV, that will give you a pivot table. But for those who want to view where it is on the Insert tab, then to the left here you find Pivot Table. So when you click on Pivot Table, it automatically detects, and you can see that dotted line running around all your data, your GL. So it is saying table range GL A1 to O5,345. That's the range you want. Then the next here it says choose where you want the pivot report to be placed. So what I'm going to do is I'm going to place this pivot report in a new worksheet. So I just click OK, and there we go. So this is the layout for pivot tables. Here is where we shall have to build our report. But to do that, in this area here, we have all the headings in our GL. So as you can see, account name, sub account, everything that we have in the GL is shown here. Then here we have 4 quadrants. We have the columns, we have the rows, we have the values, we have the filters. So if you put something in rows, okay, for example, if I pick account and move it to rows here, you'll find that it gets listed in rows here. If you put this same account in columns here, it gets listed in columns going across, okay? If you put this same account in values here, you see it just counts and tells you there are 5,344 entries, okay? If you put this in filters here, it will create a drop down where you can always pick from. So that's the effect of these 4 quadrants. Okay. So what do we want to do? We want to do our notes to the accounts. So we will come here and say we have a line here called note. So we'll pick note, put it in the rows. Okay. Then we'll come add the account name in that row also. We may also decide to add the financial statement line between the note and, okay. So don't worry about the layout here, we'll correct this, sometimes it becomes messy. Then we want to bring in our debits in the values so that it is able to and your credits and your balance. Okay. So here, quickly, I have my notes, just a bit of formatting, and I'll be done with it to share with my auditors. So now, there are some cleanups we need to do. But let's first go to the grand totals down and just see whether this thing is adding up. Are our debits and credits the same and our balance 0? I think that is fine. So once the bottom is okay, then that is fine. So what we need to do now is have this well laid out. So as you can see, it starts from 1, comes to income, then the accounts. It's a bit confusing. So we need the note 1 to be in its own column, the income to be in its own column, and these 3 accounts to be in their own column. So what we need to do here is change the design layout. So come to design, go to report layout, then show in tabular form. Okay. So when you show in tabular form, that's how it turns out. So the only you can see in here, there are also some distorting things that we need to remove. You have subtotals coming on account statement field, and I don't want it. So I'll click in the second column here, right click, and where it says subtotal finance statement line, I'll untick that so that it remains a clean report. So note 1, those are the accounts that make up my note 1, and those were the debits, those were the credits, that's the value that is reported. Note 2, these are the accounts, they are all reporting under cost of sales, and these are the accounts, those are the debits. And so it's very easy to get these notes, and as you can see, quickly, in no time, I have my notes to all my accounts. So depending on which note they're interested in, I can always filter here. If somebody wants only note 7, you can come here and just pick out 7. And this was equity. Somebody was saying, why is equity negative? You can see these guys took out the 374, 175. They were on the credits of so much, so effectively 202. And in a nutshell, that's what you do, and you have your notes to the accounts. And the beauty with the pivot tables, this is not all that you have. If, say, for example, somebody wants to know what are these debits on Deborah Wood's equity account, you just double click this figure and it will extract all the details that relate to that figure. So you don't have to go back to your ERP and try to do things. You'll have all the information here. So then you can now understand what is happening in this person's account and why the equity is actually negative. So you can see there are lots of drawings going on. This person is overdrawing her account and ends up with that debit. So that's how you use pivot tables to do your notes to accounts. So let's look at what is in here in terms of questions about that. Mapping statement of cash flows. As you are aware, you can only do a cash flow if you have two sets as you have information from 2 periods. Here we only have 1 period, so it will not be possible. If I had information to do with 2 financial years, but cash flows are a movement. It's not really complex. It's a movement. If you know how to do a cash flow, it is just a very easy thing to do with Excel. You have missed the if error function. We'll come to that, don't worry. Then in terms of payroll review, please help how you can check whether there are no ghost employees being paid. Yes, if you have your authentic list of employees, you can do a quick comparison with what is on the payroll. And again, conditional formatting can come in very handy and easy to use. So that's something you can use. Please, where did you pick the pivot tables from? We inserted it based on the database, and you go through. Maybe I will just do a rewind on that, just for the benefit of those who may not have got it. I'll do a rewind on pivot tables, so that right from where we started to where we are. Can we use the same pivot table if the database changes? If the database changes, you need to refresh. If you're not using that same database, then you need to change the database that you're using. But as you're aware, pivot tables don't do automatic updates like formulas. So once anything changes in the database, the only way it can be captured in the report is by you hitting the refresh button. Or you can right click and you'll always see refresh. What happens if the performance is exactly 5%? It is saying greater or equal to is considered good. So equal to 5% is considered good. The budget liability is lower than that one. I think we answered. Can pivot tables be used to analyze QuickBook ledgers? I think what we are doing today is an extract from QuickBooks. I think depends on how you extract it. But what I have was extracted from QuickBooks. So yes, it can. So let me go back and rewind on pivot tables. So what I'll do is I'll delete this one. So we go back to our detailed GL. And I think I did say, before you rush into pivot tables, make sure each column has a heading. Make sure each row, there's something at least, not completely empty from left to right. Make sure you have done the mapping for each of the accounts in your GL. So we have the notes, we have the where they report to, we have done all this mapping, so we are fine to go. So how do you insert a pivot table? Go to your Insert tab. To the left, you'll see Insert. There's pivot table there. Okay, when you click that, it selects the data you want to analyze, and you can see a dotted line running around it and says table stroke range, that is GL A1 to 5,000, blah, blah. And then choose where you want the pivot table report to be placed. You want it in a new worksheet. So here we select new worksheet. If I wanted it in an existing worksheet, I would select this one. This time I want it in a new worksheet. So I click OK. So when we come here, this is our pivot table. To the left here, this is where the report is going to be created. To the right here, up here I have everything, all the fields that are in my database. Okay. Then I have 4 quadrants here that I will use to create a report here. So what do we want to do? We want to create notes to the accounts. So how do we do that? We will be getting from our field list here, we have a note there. We will add it to the row labels. We have financial statement line. We'll also add it to the row labels. Okay. Then we also have account name, which will also be added to the row labels. So let's do it. Note, you can right click if you don't know how to drag and drop. And then here it says add to row labels. And you see it comes here, 1, 2, 3, up to 7. Financial statement, right click, add to row labels. It comes here, causes a bit of a distortion, but don't worry, we'll sort that. Then we come and look for account name, right click, add to row labels. It comes there. So we need to get what is in debits, what is in credits, what is the balance. Or you can only just, maybe you only just want the balance. That is also fine. If you just want the balance, so this must be added to the values section here. So right click, add to values. So you see sum of balance brings that. But if you wanted the debits and credits, right click, add to values. We'll rearrange, don't worry. Right click, add to values. So you add the debits, credits, and balance to values. But I need my balance to come last. Okay. So the next thing is to format these numbers. Excel pivot tables are wonderful, is a wonderful feature for analyzing data. But when it comes to the way it presents the data, if you don't go in and clean up, the numbers look messy. So most times you have to come and format the numbers in here. If you're in a hurry, just highlight the 3 columns, put a comma. Like that, it will work. But when you refresh, the formatting may go. So how do you do it in the correct way? You right click, then come to value field settings here. And when you do value field settings, you'll see that other than sum, Excel pivot tables can do count, can do average, they can do a multiple things for you. But here I want to do number formatting. So come to number, put the decimals you want, use the 1000 separator, select how you want the negatives to be seen, then OK, and then OK. So that one will last. So you do that for all the 3 columns. So the other thing we need to do is now rearrange these columns. Rearrange these columns because we need to find out, we need to place the note 1 in its column, the income in its own column, and then these accounts in their own column. So we'll change the report layout to, so you come to design, report layout, then you come to show in tabular form. So when you do that, you can see now note is in its own column, financial statement line is in its own column, account name is in its own column, the debits are in their column, the credits in their column, and the balance in their column. The other distortion we need to remove are these subtotals here, which is coming from financial statement line. So you can click on any of these items in financial statement, or even a blank like that, right click, and you'll see subtotal financial statement line, remove that. And in a flash, you have your notes to the accounts. Now, you see this sum of debit, sum of credit, sum of balance, we may need to remove them. But if you just come and delete this part, you just come and delete sum of like that, and you enter, it will tell you pivot table field name already exists. So for you to remove that part and still be able to read debit, credit, balance, you also have to be creative. You delete that and replace with one space. So you delete the sum of, but replace with a space. So that's how you are able to play around with it. Okay. So in a flash, we have our notes to the accounts. Okay. Let me see if there are any questions to address on that. I think everything here, I've already answered it. So let's move to another item. So we have our notes to the accounts. The next thing we want to do is do an aging of these, of our accounts receivable. So when you come here, under current assets, you have accounts receivable, 48,499, 48,499. So we want to see how do you use Excel to age, okay? Because they say give us an aging of that figure, okay? This figure has so many accounts. And like I said, any of these items, if you double click, Excel will give you an extract of everything that relates to that 48 million. So if you extract like this, this is what you have. 48 million there. So we need to find a way of how do we use Excel to do this aging. I've met a lot of people saying their systems cannot age. And I'm like, but you can still do an aging even without your system. So how do we do it? Let's look at here, the criteria. So we're going to age based on this criteria. We'll look at each of the entries there based on the date. Anything that was entered as accounts receivable. If it is between 0 and 29 days, that will be current, and 30 days, that will be current, 31 to 60 days will be there, 60, 61 to 90, and 91 and over. That's all that is overdue. So this is the guide we're going to use for us to be able to do an aging. So how are we able to know that a transaction that happened on January 1st, 2018, but still outstanding is identifiable in this criteria? At the beginning, I did mention that dates are numbers, and I say these are numbers starting from 1st January 1900, and I did say that if dates are numbers, then we can do some arithmetic. you can subtract one date from another, and then you'll be able to find the number of days in between. So for every transaction under accounts receivable, we'll be looking at the date it happened. And we know that these reports are being run on 31st of December 2018. So we'll take 31st December 2018 minus the date of the transaction. That will give us how many days between those two dates. And then Excel using Vlookup with approximate match will tell us where that transaction falls. Okay, so we have already gone through the Vlookup. I'll go to the GL now. So we said the reporting date was, we used our max, you remember in the beginning, if I can just redo it, max. For all these dates, 31st December 2018. Okay, so let's, just going to do a quick run for all of them, all the accounts in the GL. So I'll just say equals that reporting date, I lock it F4, minus, this is to get the number of days outstanding. So minus the transaction date. So I'm doing this for all the entries in my GL. Don't worry about. So if I do that, each one will give me its own number of days outstanding. But now, what I want is to find, is this current, is this overdue, is this 60 days, is this what? So I'll come and edit this formula. So I come here equals R1 minus D2, I will say equals that. So I put Vlookup there. So equals Vlookup. So this formula now becomes my lookup value. Comma. I'm looking for this from a worksheet for the age criteria here. That yellow range. I lock it up. So Excel is going to look for any of the days outstanding and try to estimate where it falls within this range. And then to decide whether it is current, 31 to 60 days, 61 to 90 days, and so on and so forth. Okay. So once I've done that, so Vlookup from that range, comma, I want it to return column number 2, so I put a 2 there. Because this is approximate match, I'll not go into looking for true. I'll just close that because Excel always knows that if there is no false at the end of this, it is automatically an approximate match. So you see, the moment I enter that, it says over 91 days. So if I copy this, you'll find that there are lots of things happening in there. So if I just do a quick filter here, you'll find that I have 31 to 60 days, 61 to 90 days current there, and over 91. So everything is well captured in there. I don't have any errors. If one of the formulas here, for example, if this date was, say, not a date, I just type in text there, H. What you would get is an error here, value. Okay? And the only way to sort that error is to dress this up with if error, start with if error, that formula, comma, then at the end of it, you can tell Excel where to do, whether to add a space or what, but we'll come back to that at a certain point. So now, if I have the age captured here, nicely for every transaction. Then I remember that we have something called pivot tables, which you have just used. So again, I'll come and just insert a pivot table, take it to a new worksheet. Okay. So here, what do I look for? I want to find the account name. I'll put it in the filter because I don't want all the accounts. I only want accounts receivable. So here I'll only pick accounts receivable. So I've filtered out only accounts receivable. Okay. Then here I'll come and pick the name for all the people in. These are all the clients for that client. Then the other part I need to bring is the age. This one I'll add it to the columns here. Okay. So right now it is telling me nothing because I've not put any values. It doesn't know what to do with that. Then I bring the balance and drop it there. And then refresh. So you can see over 91 days, 61 to 90 days, 31 to 60 days, current, and that's the total. So if I do the quick one without going through a lot of trouble doing the user formatting, we have that. But yes, this is a good aging, but there are lots of accounts totaling to 0. And I need to clean this up so that I only have a simple report instead of wasting people's time running through clients who have paid up their accounts. So I need to filter this to show only those values where the grand total is greater or that is not equal to 0. So to do that, I'll come to the row labels here. Value filter is there. Then I go to does not equal to. So it says sum of balance does not equal to 0. Then I say, okay. There we have the report, the age report for that client. So you can see here I have 48, 499, 620. You can check that with your notes. So I put my notes. 488, 48,499,620. So you can see that the two are speaking the same language. Okay, let me just quickly check out any questions coming in. But since this is pivot tables, let me just do the next one. And then I'll just okay. So the next one is just how do we use what we have here to do a chart for revenue, for example. So we know that we have all this information with us. We have already generated a lot of things using this GL. Okay. So we may again want to say, okay, let's put in a pivot table. And this time we are going to pick out revenue. So this time we come and insert a pivot table. So we're going to do a pivot chart, but it's going to be based on a pivot table. Because pivot charts are a graphical presentation of what your pivot table shows. So here, I want to look at my revenue on a monthly basis. So I should be able to bring my dates in. So add my dates to row labels. Okay. So here I'm lucky that when I bring, because I'm using Excel 2013, I think, I'm able to have this summary coming in. But let me just, if you're using if you are using an earlier version, most times your dates will just come like that when you add them to the row labels. So for you to have them grouped the way mine were, you need to make sure that these are actually dates. So right click, then come to group. There's group in the middle there. Then you can say you want to group by months and maybe also by years. So you can choose that and say, okay. So that's how it does the grouping. So here, I don't want the first one. I can select and filter out anything that I don't want. For now, let's just leave it the way it is. So these are my months. So I want to bring, we said revenue. So we'll go and bring financial statement line, drop it up here in the filter quadrant. Come here and pick out income. Okay, so we want to bring values for income only, and we want the balance. Okay, now this is where it gets interesting. When you bring in income, because it is a credit to your GL, it comes as a negative. Okay, so we need to turn these values into positives. But that will mean I go in and multiply each one of these by -1. And I don't want to go back to my GL, I just want to use the pivot table to sort that out for me. So what I'll come is, I'll come to pivot table tools, analyze, field items and sets, is calculated field. Okay, so here I can create another field called balance 2. Okay, so it is going to be called balance 2, and the formula I want to get what is in my balance. I insert that times -1, and then I say, okay. So you see it now gives me balance 2, and the figures are here. So then I can now do away with this first one. So once I have these figures, then I can come in and insert. Maybe you want a column chart like that. So here I have a chart for my revenue, because I picked out income and it's giving me those figures there. But the way it is, there's a lot of junk in here that I need to clear out. This, I only have one item in here, so I don't need this field here, so I delete so that I give space to my chart. Here in these dates and what, I don't need this 2018. So I mean less than 2018, this one here, I don't need it. So I only start from January. Anything below that that was there, I don't need it. So it expands. I may also need to give a title to my chart. So maybe this is the revenue. Okay. Then I may need to format these numbers so that I'm not showing full figures. Maybe I just need, so right click, format axis. Then come here to display units. I want to display in millions. Okay. So then the next thing is I don't want these filters, all these items here showing. So then I come to field list, right click on it, hide field buttons, right click on it and hide all. So you see that the chart is becoming smarter. There's a lot of gap between each of the columns here. I may want to reduce that so that I have bigger bars. So I click. When I go to format data series, the gap width, I can reduce this to maybe 75%. So I have bigger bars there. So that is how I'm able to generate a chart. And remember, we're using the same data set, the GL, and I'm able to do all these things. And I hope you're able to follow those steps. So that is basically what you can do with this. There are lots of things. Then somebody was asking about if error. If I come to my financial statements here. For example, if I have a 0 here, not here. If I have a 0 anywhere here, you see here I get a divide by 0 error. Okay. Now, if you are doing a lot more big analysis, you can never run away from some of these errors. So the only way you can keep these errors off your financial statements or your reports is to use the if error. So the formula here was equals F8 divided by E8 minus 1. So we'll dress up that formula with equals error. So what this does is that if that calculation, that is F8 divided by E8 minus 1, results in an error, so if that calculation results in an error, then I can say either put a 0, or if I don't want a 0, I can say put a blank. So blanks are indicated by double quotations. So when you put that, you see that goes out. If you don't put the if error, then you live with the divide by 0 error, which sometimes is not very good. Okay, so I think that brings me to the end of today's presentation. Let me just look at the questions and see if there's anything that I need to answer. Please repeat if error. Okay, I'll repeat that. Can pivot tables be used to analyze QuickBooks? I said yes. This is what we're working on, is an extract from QuickBooks. Jora Modeke, the budget and liability is lower than the actual. Why is the arrow indicating it is as good? It as good. Well, I think what I did explain was that I was just taking a uniform approach, but you can actually do a better way of looking at this, so that you look at, am I analyzing expenses? Am I analyzing liabilities? Am I analyzing assets? So that you change the way you are arriving at the variance. What else is new here? I think most of these questions are already. Please a recap on inserting charts in pivot table. You were too fast. Okay, I'll see if I can do that. How does one access these Excel tools for exercise? The Institute is going to share the file that I'm using, so you can practice, and of course the video will also be shared. Can we add the budget figures in the same pivot table? Well, if you have gone to a level of having your budget at account level, yes, it is possible. But what we had here is so summarized, so it it may not be possible, but still you can, yes, you can. Could you move pivot charts before edging? No. Otherwise, what will you be doing with the pivot charts? Yes, you can move to the pivot charts before edging. That is Timothy Ettori. If you're not doing the revenue chart, then you don't need it. So you can still skip that. Kindly remember to share your profile so that we can get in touch with you. I'll do that. Thank you for that. So can the pivot table be made static? Even if the database changes, our pivot table remains the same. You have to keep refreshing. Every time you change the database, you have to refresh the pivot table. And I did promise that we'll look at how do we refresh the pivot table. So if you have a pivot table like this one, and new information comes in, you can quickly right click and there's a refresh there. So you hit the refresh and it will go and pick up any new information that has come in. Now, maybe the other thing that I needed to tell you is that, for example, today, because we're in a very limited session, just 3 hours, which are almost ending in 8 minutes, ideally, if you add new information to this data set the way it is, it's going to be difficult for the pivot table to pick it up because this is a static range. So ideally, there is a tool that we normally use to make it dynamic, and that is called tables. So if you turn this, if you just allow me to do that, Control T will switch on your table feature. So if you do tables, then that will bring a table feature there. So anything that you normally add below automatically flows to the pivot table catch. And if you refresh, it is picked up. But today we used a static range. So static ranges, most times you find problems when it comes to refresh. Okay. Let me see if there are any new questions. Okay, share your profile. Let me get out of this file. Let me share now my profile. So there you go. That's where you can find us. Those are the numbers to call. That's the email to get in touch. So what, as a parting shot, I would encourage all participants to go and dig more on Vlookup, both using the exact match and the approximate match. Please read more about mapping. If you need, if what we have shared is not enough for you, you can ask me, I can direct you to some online resource. Sum if is a very important formula. Please read more about it. And maybe what I forgot to tell you is any of the formulas that are in Excel, there's a lot of literature about them within Excel itself. Maybe I need to just show members how that is done so that you don't start looking for information when you just have it right in front of you. So for any formula in Excel, any formula in Excel. For example, if I want to find anything about Vlookup, equals Vlookup. So I type equals Vlookup, open brackets. There's this fx. When I click there, it will give me how to work with that formula, all the arguments that are required, everything. If this part is not enough, click on help on this function. So when you click on help on this function, Excel opens out, it goes to its resources and opens all the notes related to that function. So you can read and practice what Excel gives you there. So that's why we give very, very summarized notes, because we know the notes are in front of you. And we know you can always leave our copy of notes elsewhere, but for as long as you're working in Excel, the notes are just right there with you. So please explore that route. You'll find that you learn a lot more. So Ambrose, are you still on?
Yes, I am on. I thank you so much for a wonderful presentation. And you endeavored to answer all the questions in the Q&A. Most of them were around, shall we share the presentation? Shall we share the video? Yes, we will give you the video today, within an hour after you have finished, after midday. We shall send you the video. We shall also send you the toolbox. The presenter called it the toolbox, but we will send you the files, the working files, the practice files. Otherwise, I want to thank you, Godfrey, for a wonderful presentation. I want to thank our participants.
Ambrose, we have lost you. Ambrose, are you still with us? Ambrose? Yeah, I'm sorry we have lost Ambrose, but Ambrose, are you still with us? Hello?
Greetings, Godfrey.
Yes.
Godfrey, you can hear me?
I can hear you. Go ahead.
Yes, my name is Alfred Kabuchu, and Ambrose had requested me to pass a vote of thanks and make some closing remarks. So since we've lost him, I think I can make the remarks. I'm sure he will join us along the way. On behalf of the Institute and on behalf of the many people for your and I think it's been very good. I can see the participation was great. And as a senior accountant, I can tell you, I've also learned quite a number of new things and interesting things, even with my experience of using Excel for more than 15 to 20 years. There's still something new to learn. So Godfrey and the Data House team, we thank you very, very, very much. And this training also brings to mind the times in which we are of COVID-19, to realize that some of us, and I'm sure a few others, were able to listen in and to learn while we were either traveling or in office or something. I think it brings a new dimension. So we thank you very much. And I think teaching Excel and learning it the way you are doing it is one of those things that we are benefiting from in the new normal. There are a number of areas actually that caught my mind about using the VLOOKUP option. I think that was very good. I will be going back to my Excel to use it more often. I loved the pivot tables, the good way of summarizing information and bringing out, I think, the summaries, which was great. Your explanation on the general ledger and the use of the chart of accounts, I think it was good because you are combining teaching accounting and also using Excel and emphasizing the fact that Excel is actually a tool to help us to make our work easier. So I thank you very much. And your analysis of AR, accounts receivable and accounts payable, was also good, together with the pivot table. So we thank you very much. The members were well engaged, which is good. We saw the questions, and it is great that you are going back actually to pick the particular questions and go back and explain. I think, I don't know if you are a teacher, but I think that is a very good skill. We thank you. I hope all of us who had questions were able to ask them and they were responded to. So in conclusion, thank you, Godfrey, with your team. I will be looking forward to another session of Excel. I also thank the team at the Institute, Ambrose and Derek, and the leadership at the Institute. I think these online webinars have been great. We encourage that they will continue. There are other areas, of course, that we are interested in, but we thank you for this particular one. And I hope that members will take out many things that they've learned to make their work and their analysis better, in order for us eventually to convert this to the bottom line. Because at the end of the day, is how do we convert this into money? How do we improve the profitability of our farms? And how do we improve the bottom line in our bank accounts and in our pockets? So we thank you, Godfrey. We thank the Institute. We thank all the participants. And I wish you a good weekend and blessings in the years ahead. I thank you. Have a nice day and stay blessed. We look forward to the recording that will be shared. Thank you very much.
Thank you, Alfred, and thank you all the members for participating.
Godfrey, you can end the session.
Yeah.